banks are safe, people. Remember, I'm telling you this. Banks are safe. Actually, probably it's not the case because a Federal Reserve policy warns on the possible financial sector risks with respect to banks. No fucking shit. And if you look at companies like New York Community Bancorp, for instance, and if you look at them, you can confirm that there are at least cracks within the financial system. And for those unaware, shares of this regional bank took another 20% shit just this past week when it was reported due to that they had bad quarterly or earnings report. People didn't like that, of course. And a lot of this is being attributed to exposure to the commercial real estate market in the state of New York, which has been a losing ticket as of late. But back to the Fed report. And remember the BTFP program? Well, that is ending, right? That's coming to an end.
Allegedly.
And that was put in place to shore up the banking sector after several collapses last year. With this program ending, the banks are now back in the spotlight as their safety net has been removed. So big companies, if you look at like the JP Morgans, the Bank of America's, they're all doing well when you look at their stock price. If you take a look at their stock price, it seems that everything's going okay. But look at the regional banks. There are a lot of them that are taking a kick to the nuts. Their stock price has tanked significantly over the past year, sometimes in the past week, as I was mentioning for the New York Community Bancorp. So these regional banks, we talk about it enough. This is the canary in the coal mine. These are the ones that are going to go tits up first. They have the least amount of capital that they could deal with any problem at times, and so they're going to have to get either bought up or the Fed comes in and bails them out, or some combination of the two. But look out, because there's going to be some major fucking bank failures this year. BTFP coming to an end. They have nothing left. The exposure is fucking real. They have some financial risks. And even the Federal Reserve, this policy report fucking underlines that there's some problems here. This is going to be a fun year to watch what happens.
Okay, so Zero Hedge wrote a story or put a story out on the same topic that we covered 2 weeks before then, when we talked about the difference in credit, credit. What is the name of this program or this figure? It was like the distressed credit basically, and the Federal Reserve Economic Data website has the banks broken down into two categories. One are the big boys, one of the little boys. Okay. And the big boys, we're seeing like a 3.5% sort of delinquency or distress rate in their credit products, stuff like credit cards, car loans, things of that nature, retail loans, let's say. 3.5% is not that much, and it's a lot lower than it was in 08. And there's all these other, metrics that point to this being up, something to keep an eye on, but nothing to panic about. But then if you look at the regionals are higher than they were in 08 at about 7%. And we talked about this and said, look, the regionals are really a thing that holds the banking system together, because a lot of people are looking to get loans for homes and businesses and whatnot in the United States. They use regionals. They don't use the big banks. There's a lot more competition there in terms of financial vehicles and financial institutions than there is here. And people take advantage of it. They don't always go to the big banks. With BTFP ending and, loan losses looking like they're going to start piling up for the regionals, you are actually going to see, I think, Len, this thesis that people had a little while ago that you and me talked about briefly, but I don't think really dove into. A lot of mergers between the big banks and little banks, a lot of buy-ups and scoop-ups.
I've been mentioning this for a long time.
We didn't really dive that deep into it, but now it looks almost unavoidable, does it not?
For sure. If you look at the number of banks that are operating right now, and you look at this over the past few years, and you look at year over year, decade by decade, the number of banks have been going down significantly over the past 30, 40 years.
Mm-hmm.
And what happens is through consolidation. Bigger bank buys smaller bank, or two smaller banks merge to become bigger bank. That's what essentially happens. It's just the customers still need to be served, but they're served now by whoever is going to be owning the corporation moving forward. That's exactly it. You're going to have a lot of these smaller banks that are going to be bought up or merged, one of the two. That's the reality. This has been going on for a long time, and all you're going to have in the end is consolidation between a few big banks. It's going to take a lot of time to get there, but it's trending towards that direction.
Yeah, I'm keeping an eye on the BTFP thing. I think that's it's just a huge, it's a signal that things are not going that well when you end that program and a lot of banks have trouble. This is another thing I think that's like not priced in. How many people in TradFi were talking about how backwards the BTFP program was when it was released a year ago, or when it started a year ago. It wasn't that many. People were happy about it in a lot of cases. We needed to do this to prevent a wider contagion, blah, blah, blah. You know, now it's ending. We'll see. Bitcoin had a rip when that program launched, right? When we started to see SVB and other regionals wobble and fail in some cases, at least in one case, one major case. Let's see what it does this time. I mean, we're pushing 69,000 here. We're very close. The floor on Bitcoin right now is 70,000, let's say, to make it an even number. The last time the Federal Reserve did QE cuts, bailouts for banks, et cetera, and businesses was COVID. The price of Bitcoin was 5,000, 3,000, something like that, you know, during that big COVID crash.
Yeah,
and
it was
made it up
around that price.
Made it up to 70, right? That's what, a 20x-ish?
20x from now, we're past 1 million.
You know, might be time to deploy, lads, as they say. Hard not to be all in when all this stuff is taking shape on the horizon. And it's not like you haven't seen it before, right? I think one of the things that people forget is that markets react in a way that seems irrational sometimes, because the gap between like what was going on 15, 20 years ago and then it happening again now meant that investors aged out or died, or were no longer managing money, or were no longer employing the same strategies, right? They became defensive and started doing 60-40 instead of doing equities, for example, or stuff like that. Now, the gap between the crises is what? 3 years? Like, that's if you count COVID. If you just look at the regionals, it's like less than a year right now. You know what I mean? Like, everyone remembers what happened. They know that the options are either failure, merger, or bailout. They remember what happened to Bitcoin last time. Come on. It's not that hard to figure this out, right? You're going to wind up with people who make the right choice this time on the retail side. And I think a lot of people are doing it. You look at the Bitcoin price, everyone kind of sees the writing on the wall, right? The implication is that everyone remembers, and that memory, you know, wasn't there 30 years ago, 40 years ago, or even in 08 wasn't there, right? And now it's there, and it really does matter. You know, the communication strategy and the way that these guys operate for a long time relied on stuff like that, and that's gone. That cushion is gone.